लाइफ में लेना देना तो चलता रहता है। इधर फ्लेक्सी लोन से बोरो कर लिया और उधर बाय मॉम डैड का वेकेशन डन। शादी का डिसीजन लिया, फ्लेक्सी लोन से और बोरो किया। प्रमोशन मिला तो ये लो थोड़ा लोन वापस कर दिया। थैंक यू। नए इंटीरियर्स का डील किया, फ्लेक्सी लोन से फिर थोड़ा ले लिया। ईयर एंड बोनस मिला तो इस बार लोन ज्यादा वापस कर दिया। लाइफ में लेना देना चलता रहेगा तो लोन्स में क्यों नहीं। इसीलिए फ्लेक्सी लोन फ्रॉम बजाज फिनसर्व एक ऐसा लोन जो जब चाहे बोरो करे, जैसे चाहे रीपे करे, वो भी चुटकी में। थिंक इट डन विद बजाज फिनसर्व।
हेलो, हर सीजन के लिए नए इंटीरियर्स?
हाँ, वो भी हर रूम के लिए।
फ्रिज, स्मार्टफोन या बड़ा टीवी?
तीनों क्यों नहीं?
अरे ये तो शॉपिंग लिस्ट में नहीं था।
सो अब शॉपिंग कार्ट में तो है। सॉरी।
अच्छा, नए आउटफिट्स की विश लिस्ट।
विश क्यों? Just add to cart and buy.
तो ये सब EMI पे?
और वो भी चुटकी में। On India's fastest growing EMI network. Think it done with Bajaj Finserv.
सर, अपनों को खुश रखना इससे आसान हो ही नहीं सकता। साहब, अपनों को खुश रखना इससे आसान हो ही नहीं सकता। हुजूर, अपनों को खुश रखना इससे आसान हो ही नहीं सकता।
अपनों को खुश रखना इससे आसान।
अपनों को खुशियां दिलाना आसान नहीं बनाते तो आगे कैसे बढ़ते। इसीलिए हम जो भी करते हैं उसे बेहतर बनाते आ रहे हैं, बनाते रहेंगे। बजाज फिनसर्व, थिंक इट डन।
माँ के बेडरूम का एसी या लेटेस्ट मोबाइल फॉर भाई, लेटेस्ट मोबाइल फॉर भाई, लेटेस्ट मोबाइल फॉर भाई। पुणे, पटना, चेन्नई, मथुरा या फिर बेगूसराय, या फिर बेगूसराय। नए घर के लिए चाहिए 4K टीवी हाई फाई, या फिर वाइफ को चाहिए लेटेस्ट स्टाइल। EMI है ना, EMI है ना, EMI। मॉड्यूलर किचन में पुराना फ्रिज क्यों है भाई?
शादी है नहीं, मैट्रेस पुराना है भाई। अक्खा इंडिया बोले भाई प्राइजेस है हाई। बेस्ट ही खरीदना है तो अपने EMI स्टोर पर आए।
EMI है ना, EMI।
अब काशी हो या वाशी, महंगा लगे तो EMI और बेस्ट ही चाहिए तो भी EMI, क्योंकि बजाज फिनसर्व का EMI है ना। विजिट www.emistore.com।
EMI है ना, EMI है ना, EMI।
नाची 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 नाची। धोखा है धोखा, धोखा ना खाओ जी। नाची 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 नाची। इंश्योरेंस फ्रॉड से बचना है बहुत जरूरी जी। नाची 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 नाची। वो एजेंट है या फ्रॉड पता लगाओ जी। एक्स्ट्रा ऑफर के झांसे में कहीं फंस ना जाओ जी।
अगर कोई अनजान कॉलर इंश्योरेंस पॉलिसी डिटेल्स मांगे तो कह देना उनको।
नाची 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 नाची।
मिलके स्कैम को एंड करो, हमेशा सेफ रहो जी। Always verify the caller and do not surrender your insurance for attractive offers. हमेशा सावधान रहे, safe रहे. Issued in the interest of public awareness by Bajaj Finserv.
नाची 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 नाची। धोखा है धोखा, धोखा ना खाओ जी। नाची 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 नाची। जो होगा होगा सो होगा ऐसे ना सोचो जी कॉल पे कोई पूछे ओटीपी दो ना जी
तो कह देना उनको
मिलके स्कैम को एंड करो हमेशा सेफ रहो जी
Being a hero is all about heart. It's not about ruling the world. It's about owning it. It's not about winning a race. It's about delivering a smile to the human race. It's about a spirit that just cannot be confined by geographies. It's about the heart that beats for the future. And a soul that echoes the values of generations. And yet, being a hero is never about the hero. It's about the millions who celebrate them. Hero Motorcorp, the motorcycle leader. There's a gush of wind that hums a sweet song. There's a gush of wind that fights like a hero to fill the world with possibility. There's a gush of wind that jumps across oceans and mountains, embracing the entire planet. There's a gush of wind that blows away darkness. There's a gush of wind that blows for humanity. Because at Hero, we care.
In 1868, the Tata Group was founded on a philosophy that put the community at the heart of its existence. Today, we are $100 billion global enterprise. Our today has been built on enduring values. Is about delivering excellence across business sectors. Is about building a future-ready nation. Our today has a strong foundation with community at its core. Today is dedicated to the communities we serve. Our today is always about more than just today. Our today is a continuous journey for a better tomorrow. Tata, leadership with trust.
Behold, the story of victory, of life over malady. Behold the saga of power, of science over sickness. Behold the tale of triumph, of dedication over disease. Behold the rise and rise of Cadila Pharmaceuticals Limited, one of India's largest privately held pharmaceutical companies based out of Ahmedabad, Gujarat, India. Cadila Pharmaceuticals was born out of the vision of a legend who left an indelible mark in the chronicles of Indian pharmaceuticals industry. He was Indravadan Ambalal Modi, the founder chairman of the company, rightfully christened as the medicine man of India. His vision to alleviate pain of the underprivileged through research-driven innovations has been driving Cadila Pharmaceuticals for more than 6 decades now. Innovations which are backed by the key strengths of the company, the state-of-the-art manufacturing and research facilities. The flagship manufacturing facility at Dholka, Gujarat, sprawls over 100 acres. This avant-garde facility is US FDA approved, besides meeting most of the stringent quality standards across the globe. It manufactures tablets, capsules, injectables, liquids, and orals. The second formulations manufacturing facility is located at Samba in the state of Jammu and Kashmir. The API facilities at Ankleshwar, Gujarat, manufacture a large number of key APIs and intermediates at this US FDA and ISO 9002 and ISO 14001 accredited plant. The company also has set up its first ever overseas formulation manufacturing facility at Addis Ababa in Ethiopia. This world-class facility is the only WHO CGMP compliant manufacturing facility in the region. More than 850 products spread across 12 specialties with many of India's top brands in its basket. Great goals are defined by far-sighted vision and achieved by seamless teamwork. A multicultural, multilingual and multinational workforce of over 7,000 employees is truly the propelling power of the company. Not just in the domestic market, the company has a wide global footprint with over 1,000 marketing authorizations across 85 countries. Its international sales force of over 150 highly diversified and versatile personnel lends it an outreach that blankets the globe. As the company grows, so does its commitment to research. Manned by more than 350 scientists, the R&D facilities of Cadila Pharmaceuticals at Dholka, Gujarat is an institution of breakthrough innovations. To take the focus on innovation to the next level, it partners with leading international companies to discover newer treatments. The Cadila Pharmaceuticals group is gigantic. Its group companies complement and expand the dynamic vision of the company across new avenues of healthcare and newer fast-paced business areas. Cadila Pharmaceuticals is a gentle giant. Decades of dedicated research, groundbreaking healthcare innovations, and worldwide impact proves the infinite potential of one powerful emotion. Care. The success of Cadila Pharmaceuticals bears testimony to the fact that the care continues.
आने वाले कल की दस्तक हमें सुनाई देती है, नई मंजिल है जिस ओर हमें वो दिशा दिखाई देती है। नए इंडिया का नया जोश, नए इंडिया का नया जोश, नए जोश से निकल पड़े हम, आने वाला कल होगा हमारा। नए इंडिया का नया जोश,
और नए इंडिया के सफर में टेक्नोलॉजी की शक्ति लेकर आपका भागीदार रहेगा रिलायंस। नए इंडिया का नया जोश।
लाइफ में लेना देना तो चलता रहता है। इधर फ्लेक्सी लोन से बोरो कर लिया और उधर बाय मॉम डैड का वेकेशन डन। शादी का डिसीजन लिया, फ्लेक्सी लोन से और बोरो किया। प्रमोशन मिला तो ये लो थोड़ा लोन वापस कर दिया। थैंक यू। नए इंटीरियर्स का दिल किया, फ्लेक्सी लोन से फिर थोड़ा ले लिया। ईयर एंड बोनस मिला तो इस बार लोन ज्यादा वापस कर दिया। लाइफ में लेना देना चलता रहेगा तो लोन्स में क्यों नहीं। इसीलिए फ्लेक्सी लोन फ्रॉम बजाज फिनसर्व एक ऐसा लोन जो जब चाहे बोरो करे, जैसे चाहे रीपे करे, वो भी चुटकी में। थिंक इट डन विद बजाज फिनसर्व।
हेलो, हर सीजन के लिए नए इंटीरियर्स।
हाँ, वो भी हर रूम के लिए।
फ्रिज, स्मार्टफोन या बड़ा टीवी,
तीनों क्यों नहीं?
अरे ये तो शॉपिंग लिस्ट में नहीं था।
सो अब शॉपिंग कार्ट में तो है। सॉरी।
अच्छा, नए आउटफिट्स की विश लिस्ट।
विश क्यों? जस्ट ऐड टू कार्ट एंड बाय।
तो ये सब ईएमआई पे?
और वो भी चुटकी में। On India's fastest growing EMI network. Think it, done with Bajaj Finserv.
सर, अपनों को खुश रखना इससे आसान हो ही नहीं सकता। साहब, अपनों को खुश रखना इससे आसान हो ही नहीं सकता। हुजूर, अपनों को खुश रखना इससे आसान हो ही नहीं सकता।
अपनों को खुश रखना इससे आसान।
अपनों को खुशियां दिलाना आसान नहीं बनाते तो आगे कैसे बढ़ते। इसीलिए हम जो भी करते हैं उसे बेहतर बनाते आ रहे हैं, बनाते रहेंगे। बजाज फिनसर्व, थिंक इट, डन।
माँ के बेडरूम का एसी या लेटेस्ट मोबाइल फॉर भाई, लेटेस्ट मोबाइल फॉर भाई, लेटेस्ट मोबाइल फॉर भाई। पुणे, पटना, चेन्नई, मथुरा या फिर बेगूसराय,
या फिर बेगूसराय।
नए घर के लिए चाहिए 4K टीवी हाई फाई, या फिर वाइफ को चाहिए लेटेस्ट स्टाइल। EMI है ना, EMI है ना, EMI।
मॉड्यूलर किचन में पुराना फ्रिज क्यों है भाई?
शादी है नहीं, मैट्रेस पुराना है भाई। अक्खा इंडिया बोले भाई प्राइजेस है हाई, बेस्ट ही खरीदना है तो अपने EMI स्टोर पर आए।
EMI है ना, EMI।
अब काशी हो या वाशी, महंगा लगे तो EMI और बेस्ट ही चाहिए तो भी EMI, क्योंकि बजाज फिनसर्व का EMI है ना। विजिट www.emistore.com।
EMI है ना, EMI है ना, EMI।
नाची 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 नाची। धोखा है धोखा, धोखा ना खाओ जी। नाची 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 नाची। इंश्योरेंस फ्रॉड से बचना है बहुत जरूरी जी। नाची 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 नाची। वो एजेंट है या फ्रॉड पता लगाओ जी, एक्स्ट्रा ऑफर के झांसे में कहीं फंस ना जाओ जी।
अगर कोई अनजान कॉलर इंश्योरेंस पॉलिसी डिटेल्स मांगे तो कह देना उनको।
नाची 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 नाची। मिलके स्कैम को एंड करो, हमेशा सेफ रहो जी।
Always verify the caller and do not surrender your insurance for attractive offers. हमेशा सावधान रहे, safe रहे. Issued in the interest of public awareness by Bajaj Finserv.
नाची 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 नाची। धोखा है धोखा, धोखा ना खाओ जी। नाची 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 नाची। जो होगा सो होगा, ऐसे ना सोचो जी। नाची 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 नाची। कॉल पे कोई पूछे OTP दो ना जी,
तो कह देना उनको।
नाची 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 नाची। मिलके स्कैम को एंड करो, हमेशा सेफ रहो जी।
Being a hero is all about heart. It's not about ruling the world. It's about owning it. It's not about winning a race. It's about delivering a smile to the human race. It's about a spirit that just cannot be confined by geographies. It's about the heart that beats for the future and a soul that echoes the values of generations. And yet, being a hero is never about the hero. It's about the millions who celebrate them. Hero Motorcorp, the motorcycle leader. There's a gush of wind that hums a sweet song. There's a gush of wind that fights like a hero to fill the world with possibility. There's a gush of wind that jumps across oceans and mountains, embracing the entire planet. There's a gush of wind that blows away darkness. There's a gush of wind that blows for humanity. Because at Hero, we care.
In 1868, the Tata Group was founded on a philosophy that put the community at the heart of its existence. Today, we are $100 billion global enterprise. Our today has been built on enduring values. Is about delivering excellence across business sectors.
And it's not a word, it's a sentence, but you know, they used to have this thing about the new word in the Oxford Dictionary. You are on mute must be the sentence for the last 18 months.
We are being live streamed. We can start now.
All right. Okay. Well, good morning, good afternoon, and good evening to all of you, depending on which part of the world you're joining from. A very special and warm welcome to the 27th edition of the Confederation of Indian Industries Partnership Summit 2021, and to the session on sustainable finance investing for the future. My name is Rajiv Mishra. I am the managing director of a power company called Apraava Energy. I also co-chair the CII National Committee on Power. In this partnership summit, there are over 50 sessions spread over 3 days, including 7 country sessions. We have close to 200 speakers from more than 40 countries worldwide. And they include 20 ministers from all over the world, 7 Indian ministers, 25 global CXOs, and more than 100 heads of institutions, leaders, experts from around the world. We also have delegates participating from more than 100 countries spread over the 3 days that this summit goes on, and over 50 participants at the virtual investment pavilion. I welcome you to this session on sustainable finance investing for the future. I started thinking about what sustainable finance means and have written my own definition down, which is basically investment decisions that take into account the ESG factors of an economic activity or a project. In today's world, obviously, the idea of sustainable finance is a disruptive force. In fact, leaders are demonstrating that thinking differently about performances pertaining to ESG aspects can drive change that delivers more than just business value and at the same time better outcomes for the people and the planet. In response to this growing acknowledgement of planetary boundaries and social imperatives, policymakers, regulators, and private sector actors are according recognition to environmental and social development and the funding required to achieve this. Now, we have just had the COP26 in Glasgow in the UK, which perhaps I would not be accused of exaggeration if I say was a meaningful COP, perhaps the most meaningful one post Paris, although depending on which side of the fence you are, you can be either disappointed or you can look at it as a positive. But irrespective of which side of the fence we are on, I personally think it was a positive one, and at least keeps the goal of 1.5 Celsius alive, although perhaps barely alive. Notwithstanding whichever path the world goes on, we know that countries around the world have been tasked with ambitious 2030 emission reduction targets and are working together to restore ecosystems and build infrastructure amenable to climate change. The COP26 sought to propagate this target by mobilizing finance as a key goal of the summit. In addition, the developing countries obviously want the developed world to deliver the over $100 billion in climate finance per year, which was promised in COP21 in Paris. And this, in any case, can only be achieved by working in collaboration with international financial institutions to reconfigure both the private and public sector finance on the path of achieving global net zero. Now, taking into consideration the gap that exists between the required level of investments to meet the SDGs, various bodies have, and the one actually available, various bodies have over the past decade amplified the roles of banks, asset owners, insurance asset managers, and stock exchanges in driving the mobilization of financial flows. Indeed, at Glasgow itself, we saw several declarations which sought to achieve the same objective. Speaking from a policy perspective as well, various UN-supported initiatives such as the Principles for Responsible Investment, the Principles for Sustainable Insurance, the Principles for Responsible Banking, and the Sustainable Stock Exchange initiatives. The European Union, for instance, said that they would seek to mainstream the Sustainable Development Goals in the European policy framework, and that's within quotes, and have developed the Sustainable Finance Action Plan aimed at reorienting financial capital to more sustainable investments. At the end, all this boils down to the very fact that financial institutions and corporates are finding their way through and trying to understand the implications of responsible investment. For the process to ensure a high level of trust and expected outcomes, the financial services industry needs to develop ESG standards that are consistent, that are transparent, and they are so globally, and crystallize the foundation of best practices and taxonomies to ensure the investment products are credible in terms of delivering socially responsible outcomes. ESG evaluation, for instance, as part of the credit risk assessment of a company is starting to become an important factor. It is therefore not a surprise that funds that use ESG have more than $50 trillion in capital and are growing fast. In fact, based on a recent article in The Economist, on an average of 2 new ESG funds are launched every day. As core marketplaces for design of new products, exchanges must also be placed as a center of focus on sustainability for genuine change to take place. And here, instruments like derivatives can play an essential role in mediating this transition to a sustainable economy. As noted in a recent research report by the Center of European Policy Studies and the European Capital Markets Institute, derivatives enable more capital to be routed towards sustainable investments, can help market participants cover risks related to ESG factors, facilitate transparency and market efficiency, and contribute to what may only be described as long-termism. Speaking for those of us who are in a developing country like India, the development of a more robust and resilient, sustainability-oriented market framework focused on banking, institutional investment, public finance institutions, and foreign direct investment is required. The financial services sector will no doubt be an essential partner in providing this funding and managing the risks associated with sustainable investments. Having said so, we do need more role models and stakeholders in the financial sector to raise their hand and demonstrate it. We have to support the idea of a circular economy to focus and make sure that the corporate supply chain is incentivized or disincentivized on the basis of performance in decarbonization. Investment in sustainability should not be seen as a CSR, but as a business opportunity to do the right thing. And that is where this role can play, this session can play a role, get everyone together for understanding diverse perspectives and to guide each other towards the most productive route for a transition to a sustainable economy that factors in a massive amount of long-term funding. I welcome all the participants and thank you for sparing your time in attending this session. I have a very distinguished panel. In fact, earlier today, I wrote to Seema saying that I'm facing performance anxieties because of the amount of intellectual capital available on the panel. But I guess I can say that I'm bringing the average down and hopefully helping some of our listeners. In order in which I will introduce the panelists first, and that will also be the order in which I'll request them to put their thoughts first. The overall structure I had in mind was perhaps give up to 10 minutes to each of the panelists to present their perspective on the topic. We will then move on to Q&As, and if time permits, including Q&As from the people participating virtually in this session. The panelists are first and foremost Ms. Linda Zailina. She's the CEO of International Standards Sustainable Finance Center, IFSC, from the Czech Republic, although she's based at the moment in the UK. And Linda, you will correct me if I'm wrong, but the ISFC is an apolitical, impact-driven think tank dealing with sustainable finance issues. My second panelist, I'm not sure whether he's joined, is Dr. Theodore Koyianu, who is an assistant professor in finance at the Queen's University in Belfast and member of the EU Platform on Sustainable Finance UK. Ms. Jane Goodland, she's the head of sustainability at London Stock Exchange Group, and she's responsible for the LSEG's sustainability strategy and agenda. I'm also very pleased to welcome Ms. Zoe Knight, who's the global head of the Hsbc Center for Sustainable Finance, which is also, Zoe, you will correct me if I'm wrong, is a global think tank finding real economy and finance solutions for sustainability challenges. And finally, we also have Ms. Ellie Siapkidu, with apologies if I pronounce your family name incorrectly. And she is the research lead for Financial System Transformation World Benchmarking Alliances. And as the name suggests, the World Benchmarking Alliance evaluates and scores companies on the basis of sustainability practices. I am told that Dr. Theodore Koyianu is not joined yet, but the rest of the panelists are here. So thank you very much for joining us. Welcome very much indeed. And perhaps if I could start with Linda to present your perspective on the topic, please. The usual housekeeping rules for web meetings like these apply. Kindly keep yourself on mute unless you're speaking. Please do turn on your cameras if you haven't already when you are speaking. And as I mentioned, we'll I'll keep an eye on the chat box for any questions from the participants. We will finish at or before 1:30 p.m. UK or 7 p.m. India time. So with that, Linda, over to you.
Thank you so much, Rajiv. And it's a pleasure to join mainly female panel. That doesn't happen very often in finance. So it's a pleasure to be here, and thank you for hosting. So as you mentioned, we are a think tank. So we do research, we do knowledge generation, convening, but we also love to ask all the difficult questions. And I think there's a lot of difficult questions that we still need to answer, even after what is a moderately maybe successful COP26. And that usually actually touches upon how do we implement all these pledges and promises into practice, and what we need to change about how finance works, but also how do we connect finance to the real economy. And this is a real issue that we need to solve. First of all, as Rajiv very accurately pointed out, finally what has changed is that we don't talk just about capital. It's when capital actually meets natural capital and social capital. At least that would be the premise of ESG. And I think it's very important to discuss what has changed over the last few years, and maybe which are the hotspots which are changing finance and changing how we think about these issues. And I think one of the first ones, we just had the taxonomy last week, announced as a proper, well, not implemented, but finally it's a law, and the EU taxonomy will be implemented going forward. And what is very important about the EU's thinking about this is the idea of double materiality. And it's not just an EU idea. I think that's an idea that a lot of different academics across the world are thinking and talking about. And I think this double materiality concept, where you look not just about the impact for you as a business in terms of climate change, what are the risks in terms of, for example, if you're in fishing industry, is overfishing going to eat into your cost benefit analysis and profitability, but also exactly that part where you look at the impact that you're having on environment and society. So this is a very important development because it can be taken in many different directions. And what is very interesting is the idea of impact weighted accounts. We currently see that being developed and looked into deeper by Harvard University and George Serafeim, who's a professor there. And we think that this is one of the big paradigm shifts that going forward needs to change. We need to actually integrate impact, or the performance, social and environmental impact, as part of the accounting system for different financial institutions to be able to better understand what are the impacts, where are the risks, and that way also improve the measurability and data. The other thing that's very interesting is also we have worked in the past with some rating agencies, and it's also very interesting seeing how that is changing, how they're trying to identify additional indicators that are not reliant on self-reported data. Because as my fellow panelists will also probably reinforce, we do have actually quite a lot of data already, but it's often not very tidy. It's often self-reported and isn't verified, and that is often a big issue. What we did over the last few years, we did a very interesting project on the S. And this is another thing of ESG that we need to talk about. And that brings us to a very difficult conversation, because if you're looking at developing countries and countries that maybe don't have as much limelight at COP and elsewhere, the issue is that we actually also need to talk about inequality and how we're going to compensate for some of these social costs that we will impose on different countries, because the E cannot be solved without the S. And we did a very big report together with the Refinitiv, with Thomson Reuters Foundation, with London Stock Exchange actually as well, was involved, in White and Case. And we looked at what indicators exist for the S and what are the most common myths that investors hold about the integration of the social aspect. And it was a fascinating exercise, realizing that we still have a real disconnect between different stakeholders. We have a big disconnect between what is happening in science and academia versus what is the knowledge integrated by investors and some of the financial sector and policymakers. And then you have civil society that is kind of sitting in between and trying to expose greenwashing, impact washing, whatnot. And what we think that needs to improve going forward is actually making all the different voices heard and relying a bit better on generating more solid evidence and sharing that knowledge. We still have a lot of industry events which are very siloed, and we would like to see that changed. We used to run a consultancy that used to play a devil's advocate for corporate boards. And I think we need to do that in different fields. We need to actually have people who ask all the very difficult questions, who ask difficult questions about supply chains, who ask different questions about how pledges actually end up being implemented and how we can improve that process going forward. And I think it's fantastic to see that we have World Benchmarking Alliance here as well. We're a member, and I think they're doing a fantastic work pushing the envelope. We've also done some practical workshops with London Stock Exchange, actually, for cities and municipalities, how to launch and bring to market a green bond. And I think these kind of initiatives are absolutely crucial. Not only keeping the conversation going at the high level, hearing all the stakeholders, but also figuring out how to do the very practical things. And that's where I think a lot of exciting things can happen as well. And we can learn from them and maybe try and amplify the best used cases in different jurisdictions, different contexts. Because from where we sit, we also think that how sustainability is implemented practically actually is quite context specific. And we should bear that in mind, because when we looked at the S indicators, and it's the same with the E often, different issues have different materiality and they need slightly different adjustment to how you actually solve them in reality, even if the end goal is shared by everyone, which is improved environmental and social performance so that finance can deliver on its promises. But I'll keep it at that because I believe my fellow panelists might even have presentations. So I think they should definitely get some more airtime. Thank you.
Thanks very much indeed, Linda. I thought I would ask 5 questions at the end, but I think I have more than 5 only on your presentation. So we'll see how that goes. But could I now invite Jane Goodland from the London Stock Exchange Group? You did mention that you've done some work with the LSE, so perhaps if I could request her to speak next. Thanks.
Thank you, Rajiv. And thank you very much for inviting myself and London Stock Exchange to be part of today's panel. It's a great honour to be part of the summit, so thank you very much. I should say, actually, as a bit of a kind of caveat, that I've recently joined LSEG, London Stock Exchange Group, here just in September. So I don't have all the corporate history knowledge, but I joined the organisation to really help it deliver its ambition around sustainability and sustainable finance in particular. So in terms of, I guess, the creation of a sustainable economy, I think, and particularly the response to the global climate change challenge, we now know that the scale of the challenge is enormous and complex. So we really do need a reallocation of capital to the extent that we simply haven't seen before. So we, quite literally are in uncharted territory. But there is consensus between governments and the finance industry that the trillions needed to really kind of fund that reallocation of capital and really transform economies will rely heavily on the role of private finance and private financial institutions. So actually having kind of these organisations on the call today is spot on, because we, like Linda said, we really do now need to focus on kind of converting those promises to practice. And we need to do it quickly. The reallocation needs to happen swiftly, but in a way that ensures that all countries can participate in the transition, whilst supporting the economic development needed in some countries to really ensure that we're alleviating poverty and improving health and living standards. So this is basically this is a whole world transition. And it's really important that as we go to COP27 in Egypt, that is really at the top of the agenda. And I do hope that is the case. So the London Stock Exchange Group completed its acquisition of Refinitiv, the data business, earlier this year. And now we have a very wide range of capabilities, much wider than before, so that we can operate across the full trade life cycle. And it's our ambition really to play our part across the whole trade life cycle to really accelerate sustainable finance. And we believe that we've got this unique kind of position. So not only do we have an opportunity, but we have a real sense of duty. And we're really getting ourselves organised to execute on that duty. And we've identified 3 priorities where we feel as if that we can make the greatest impact. Number 1, that's to accelerate the just transition to net zero. Number 2 is about enabling the growth of the green economy. And 3, coming back to Linda's point, it's about promoting and creating an inclusive economic opportunity within countries and between countries. So what does that mean in practice for LSEG in terms of our day-to-day business, to give you a bit of a practical sense? Well, it means that we're providing high quality climate and ESG data so that companies and investors can really start to understand and make informed decisions, business decisions and investment decisions, which really factor these kind of aspects into their kind of considerations. But we do need more companies to disclose. So we only have about 43% of the FTSE All World, so that's 4,000 global listed firms. Only 43% of those are producing emissions data, and even fewer have set and published reduction targets. So whilst we hear a lot about ESG disclosure, actually we've got still a long way to go to actually make that more complete and more universal. And so that's why we do encourage comprehensive and comparable disclosure globally by companies. And that's important that we're starting to talk more about kind of, that goes for public markets and private markets. We're quite clear that we want to avoid this 2-tier economy between public and private markets. And, you know, effectively, there's no real value from a global perspective of simply kind of shifting where heavy polluters get their capital from. So this needs to be a whole world, all company solution and transition. We're also helping to create indices which help investors to realign portfolios aligned with the 1.5 degree target. And that really is about kind of creating the kind of financial market infrastructure, making it easier for investors to start shifting their allocations. And we're starting to see billions move on to those type of indices, which is really very promising indeed. The other things we're doing is, and we've touched on it before, is around sustainable taxonomies. We think this is particularly important for the growth of the green economy. We can only grow and scale the green economy if we actually know what that is. And then we build the infrastructure around that. So, for example, we're building green bonds segments, sustainable bond segments, transition bond segments. We can only do that when we have a common way of talking about green and being able to influence and direct financial flows in that respect. I guess the thing that's really kind of important is that we need to make sure that those taxonomies, as they're developed around the world, have some sort of commonality. There's no point in kind of Europe not being able to talk to other parts of the world. So the interoperability of taxonomies is vital because we live in a global economy, basically. So I've talked also about one of the areas that we're also helping to kind of scale and grow the green economy growth is around our green revenues classification system. So this is built on many, many years worth of data, and it grows all the time. And it helps us to really understand which companies are driving revenue from green activities. And from that, we've been able to create our green economy mark, which is given to companies who generate more than 50% of their revenue from classified sustainable economic activity. And actually, that kind of data and classification system actually played a foundational role in some of the EU taxonomy, and that fed into that because we've been doing that for quite a long time. And more recently, something that we've just launched, actually just at COP26, is the creation of our voluntary carbon market mechanism, which we will be adopting in the new year. And effectively what that does is create an opportunity for listed funds to attract capital to deploy into environmental projects in emerging and developing countries, which will then generate carbon credits, which are then required and demanded by companies looking to effectively put that into their transition to a sustainable and low carbon operating model. And that's very exciting, actually. So we do think that this is a really necessary and important part of the global transition. And we haven't, globally, we haven't yet quite cracked that. Certainly a price on carbon is something that we really do need to see in order to actually kind of mature those markets so that actually we can start properly pricing carbon. And that's a bit of a missing piece at the moment. We talked about some of the initiatives in play, and I wanted to just pull out a few. We're working with the UN Sustainable Stock Exchange Initiative to really help companies and issuers to align reporting. So we've just issued our own guidance, climate reporting guidance for companies that list on the London Stock Exchange, and the Johannesburg Stock Exchange is doing a similar thing. And I know other exchanges around the world are also preparing their own guidance. So that's a good development. Another big win at COP26 is the development of the International Sustainability Standards Board, which will create a global common standard for disclosure, effectively creating one global rulebook, if you like. That's good, but we really do need to kind of move to that quite quickly and then obviously ramp up and scale disclosure against those standards. And then last but not least, we're working with the Transition Pathway Initiative, which is really kind of not relying on companies to disclose their own data, but actually doing the academic, really deep research on companies to really understand what their kind of transition pathway should look like, enabling investors. And this is all open access information, by the way. This is not stuff that's sold. This is all open access, so any investor can access it. But really trying to help deepen engagement between investors and companies, really kind of work, allowing people to kind of determine the extent to which transition plans actually really will achieve the objectives being set out. And we've just helped to launch a new climate transition centre at the London School of Economics to scale this research, because before it's been focused on about 400 heavy polluters, and we want to scale that. So that's now scaling to, it will eventually be 10,000 issuers globally. And I think that's a real, it's an example of a great innovation and a great game changer about open source information, which is academically robust and rigorous and really provides a solution to the gap that we see. And of course, you mentioned, I think, the Glasgow Financial Alliance for Net Zero, where we were founding members of that. And, the alliances that have been created as a result under the GFANZ umbrella, I think are starting to kind of systematically shift the financial sector, challenging them to set targets about how they reorientate their business lines, aligned with the 1.5 degrees. So as you can see, there's a huge amount going on, absolutely tons, right? So, but I think that we collectively mustn't rest on our laurels. We must, really continue with kind of all our efforts and continue to scale the activity. That's everything for me.
Thanks very much indeed. And just like Linda, there is so much in what you said. So thanks very much. I'm having to restrain myself from telling you that voluntary carbon markets are not only exciting for you, but it's a lot more exciting for power companies like ourselves. So I must get your business card from the CII folks. Thanks very much. We'll come back to many of the important points you raised, Jane, at the end in the Q&A session. With everyone's permission, if I can move on to Zoe Knight. As I mentioned at the beginning, she's the global head of Hsbc Center for Sustainable Finance, which was surprised to read is an in-house think tank. I thought banks just wanted to make money, but that's a joke. Zoe, over.
Thanks, Rajiv. And echoing Jane's comments, it's an absolute delight to be here this afternoon and to be able to share some insights on the sustainable finance landscape. You're right, Rajiv, we do like to be a profitable company, but we also want to do the best for our clients, which is why it was a sensible idea to look really closely at how the energy transition is going to impact all of our customers worldwide and the economies that we serve, but also think about what the system response or the financial system response is to delivering change, whether that's purely mobilizing the volumes of capital required, or also thinking about the shift needed across the financial system to move from a risk and opportunities based approach to one of alignment. And so, if I may, I'm just going to run through this concept a little bit in detail with the help of a slide, and then talk about what HSBC is doing and the growth of the market. So first off, when I share my screen, which will hopefully be a seamless activity.
It actually is. Yes, thank
you. It's seamless. One of the points that I've really recognized over the last 2 years, which is a fast-forwarded way of thinking compared to the previous 15 years of thinking about climate, is that financial institutions are being asked to shift their mindset in terms of how they deal with climate. So since the world began, banks and other asset managers, asset owners are talking about investment decision-making in terms of risks and opportunity. And in a climate context, that's very much meant identifying the risks related to high climate impact assets if policy is implemented to address climate change, i.e. if carbon prices, as Jane was talking about, are a critical means of addressing the problem, if they really do get implemented extensively through national economies, or if there are other regulatory drivers such as energy thresholds in terms of power coming from renewables that might result in a disruption to the value of assets. And that risk-based approach really took on new meaning in the aftermath of Paris, COP21, as the Task Force for Climate-Related Financial Disclosures came together to address the essence of potential financial stability unrest in consequence to climate disruption. And so those risk activities are really all related to this upward emissions curve that you can see on the left-hand side of this diagram. Conversely, a lot of dialogue around the opportunity set in terms of pure green solutions to climate is now a very obvious conversation. Essentially, we know that we need to electrify as much as we can with renewable power and renewable sources to really create that step change shift in emissions profiles to get us on that pathway to a net zero outcome by 2050, which would be aligned with a 1.5 degree temperature rise. And of course, one of the key outcomes of COP is that 1.5 degree goal is now the common language for everybody, as opposed to the 2 degree one, which is an important shift. But those risks and opportunities, whilst clearly important in the dialogue, are now no longer sufficient for a financial institution to show leadership on this topic. And what we're seeing is a work through to look at the downward emissions curves depicted in this slide here that will take us on track to a 1.5 degree outcome, and how that will be implemented across the economy as a whole. So one of the positive outcomes of COP was that the pledges made just before the summit moved the temperature goal down to around 1.8 degrees if everything is implemented. Clearly an improvement, but not quite enough to get us on track to where we need to be to avoid the worst consequences of climate change. So this alignment topic is something that starts to become incredibly complex, incredibly fast, because we're talking about the sectors where there is not a real clear opportunity or risk set with decarbonising, and without a clear pathway for substitution or shift. And so therefore they are sectors which will likely have some residual emissions associated with them, But nonetheless, as a bank such as ourselves, but also across the asset manager, asset owner community, we need to think about whether or not those sectors are on that aligned to a future net zero outcome curve. And Jane's already alluded to some of the initiatives that are helping with this, such as the Transition Pathway Initiative. The work of the Glasgow Financial Alliance to Net Zero will also help set out how sectors are thinking themselves about decarbonising steel, for instance, or decarbonising cement. A critical player in this on this topic that we tend to work quite closely with is the Energy Transition Commission. It's one of the ways that the HSBC think tank works to understand the leading edge thinking across industry as a whole, to be able to bring that back in-house and talk to our global client-facing team that need to build their capabilities and capacity in this space in order for us to help our clients on their own financing journey as they move to becoming net zero businesses themselves. So this shift towards thinking about alignment means that we're working through new methodologies and thinking to be able to deliver that net zero outcome at an economy-wide level, not just at an entity level. That's one thing. The second point that I want to make really is about the importance of the labelled finance market. Now, we've talked for a long time about the importance of transparency to demonstrate progress, that either corporates or governments are doing what they said they would do in terms of climate pledges. So clearly ahead of Paris, we had a wave of commitment that was all about trying to get a consensus signal to policymakers that corporates and financiers would back national action on climate. Now, in the finance sector, what's really helpful is the labelled products that demonstrate whether or not that momentum is being translated into on-the-ground activity. And so clearly the pure green product suite that was established back in 2014, 2015 has been helpful at, as I say, showing the world that the opportunity set is being covered. But as we move forward into looking at these hard to abate sectors and the real economy shift, we're seeing an uptick in the rise of sustainability linked bonds, for example, and sustainability linked lending. And this is helpful because it starts to set out more of a transition journey. So we can have social indicators, we can have transition indicators like emission reduction, but also the scale up of products and services within a company that are sustainability aligned and start to demonstrate whether or not a high climate impact company today is financing itself today to be a low climate impact corporate of the future. We've reached over $1 trillion in this space, which is no mean feat, but in terms of the numbers needed for mobilization, we've still got a way to go, and we expect COP27 in Egypt to carry on the finance theme of COP26, so as to bring capital to both to mitigation activity, but likely more or increasingly towards the adaptation and resilience side as well. All important stuff. But what's HSBC doing? Well, we've set out a holistic approach to climate by addressing both our operational emissions that come from power use, travel, not so much travel over the last couple of years, but waste and food, etc. But importantly, we're committed to align, going back to the alignment topic, finance emissions to net zero by 2050. That means that we're looking at the composition of our balance sheet and our capital markets activity, and ultimately we'll run that to the whole of the activities across the bank, including asset management, to think about, okay, are all of our entities that we're financing on their own net zero scientifically aligned pathway? Now, this landscape has moved quite fast, and we've worked on it collaboratively in initiatives such as the Sustainable Markets Initiative Financial Services Task Force, which is a composition of 11 banks that joined forces with the UN to launch the Net Zero Banking Alliance back in April. And we're really coming together to have that robust dialogue around what makes sense for a bank to practically implement, what the knowledge gaps and barriers are to doing that at speed and scale so that we can solve them, but also trying to set out a pathway of convergence whereby there is enough flexibility for each bank to reflect its own geographical and sector profile, but there are also enough guardrails around the thinking that make sure that we all have high integrity, scientific aligned, climate integrity approaches. So for example, one of the ways of thinking about this is that a core underpinning of the work that we did was that the outcomes should be scientifically aligned. Now, when we're thinking about how to target set about against our own emissions, we want to look at pathways that generate a net zero outcome. Now, that might be delivered in any number of different ways at a global level and importantly at the country level, whereby the emission shift might come in the power sector or it might come in the transport sector. There will be residual emissions. So how does the role of negative emissions fit into a strategy of implementation for a bank? So we discussed all of these types of issues, but ultimately getting to a place where the principle is scientific alignment, but the model chosen to look at emissions may well be an IEA generated, an IPCC generated, an in-house generated, a WRI collaborative model. It can be provided by any different type of provider, yet the integrity of thinking and methodology and analysis is in place. And one of the activities that we found particularly useful was chairing, as I mentioned, this financial services task force, which published a practitioner's guide sharing the best practice case studies across the 11 banks in the room and the steps that they're taking to look at the emissions that they are associated with through their financing activities on the balance sheet. A second critical piece for us is to set out goals in terms of financing levels. So we've pledged to facilitate around between 750 billion and $1 trillion over the next 10 years. Well, we set it out in 2020, so that's to 2030. And that's about really demonstrating change in high climate impact areas and being mindful of the fact that around 3 billion people today are still dependent on fossil fuel generated power. Now, we clearly need to shift that, but we want to do it in a just and equitable way. And one of the things that we're trying to focus on is innovative financing mechanisms for accelerated exit of fossil fuels, whether that's financing that can provide the underlying baseload from renewables versus coal or gas, and how we can really support local communities that are going to be impacted by jobs and other issues in relation to this shift. So it's really a kind of two-pronged approach on the alignment thinking and the financing thinking. And lastly, we're focusing on innovative solutions. So we know that that taking emissions out of the economy is going to be critical to get to 1.5 degrees as fast as possible. We want to promote the focus on nature-based solutions as well as technology-based ones, and do that in conjunction with world experts that are in the WRI and WWF, among others, and partner with those entities that can help us speed up. Because essentially what we're trying to do here is really speed up the momentum across the financial services industry to act on all fronts, whether that's managing risks, deploying capital for opportunities, but also increasingly thinking about this alignment piece of how we support the sectors that are critical for the solutions, i.e. steel for wind turbines, yet are heavy energy users themselves. So thank you again for inviting me to participate in this conversation, and I'm delighted to discuss some questions a little bit later.
Thanks very much indeed, Zoe. Both of you have, all three of you have mentioned, and I certainly noticed that it is an all-woman panel. It is an absolute privilege for me, and I will try my best not to mansplain anything. Not that I can dare do that. Thanks very much indeed. Moving on to Ellie now. Ellie Siapkidous, she works with the World Benchmarking Alliance in London, and perhaps there already has been several references to how data and standards and disclosures need to be standardized so that investors in the world at large are able to compare one corporate with another. But without telling you what to speak, perhaps Ellie, I can give you the first few minutes to speak on the topic, and then we can take it from there in questions.
Thank you. And thank you very much for the invitation today and for your interesting interventions. Linda, it's lovely to see you here. I know that you're part of the Alliance of WBA, but so maybe before I speak about sustainable finance and share a very happy moment, which was that we launched the financial system methodology almost yesterday at lunchtime. It might be useful to say a few words about WBA and about the theory of change and how indeed we are hoping that benchmarking can create a better world. So the World Benchmarking Alliance is a non-profit organization. We were created almost 3 years ago, and our aim is to incentivize the private sector in contributing towards sustainable development and delivering a sustainable future for all. And this is based on a firm conviction that you can't just rely on governments. And Linda, you mentioned these very briefly, that you have the regulators and policymakers, and on the other hand, you have the stakeholders and then the practice of financial institutions, and there is a gap there. So trying to fill in this gap and creating an accountability mechanism for the private sector, we focused on the Sustainable Development Goals as a North Star. We took that and we created 7 systems because we felt that you can only change the system through a system lens. You can't just focus on one particular topic, or just on climate, or just on ending poverty if you take the Sustainable Development Goals. So we created 7 systems which includes digital inclusion, food and agriculture, climate and energy, urban, nature, and of course social issues, which are at the center of all of this, and of course the financial system, which is the focus of my work. So within these 7 systems, we identified the Keystone Companies. These are the most influential companies in these systems, and by influential we mean companies that have a disproportionate effect on the system in which they operate. And our aim is to benchmark 2,000 companies across these 7 systems by the end of 2023. At the moment, we have evaluated 150 companies on digital, 350 on the food and agriculture, and 180 on climate and energy benchmarks. For the financial system benchmark, which is the focus today, we're going to benchmark 400 Keystone institutions, including 11 of the Indian institutions, banks, and an asset owner and an insurer. So the way we are trying and hoping to create change is by benchmarking and by creating these rankings. And the way these work is that you highlight the laggards, you highlight the top performance, and they mobilize action. So they mobilize action in various ways. One is that they can be used by investors to encourage or discourage corporate performance. They can be used by governments and regulators to make informed decisions about policy. And they can be used by companies themselves and financial institutions. So in this respect, they act as an accountability mechanism. Importantly, they are free to use. We're a non-profit, so this is a public good. Everyone can use them, including investors. And also importantly, we take a lot of time to develop these methodologies. We have a multi-stakeholder approach, and for the financial methodology, we took over 2 years to develop it. We had roundtables, which were regional. We had, as you mentioned, Linda, earlier, more siloed conversations depending on the various industries. And we came up with 32 issues. So pulling a little bit the conversation back to how we started, and notwithstanding, Zoe's excellent presentation about all the tools that HSBC is developing and the initiatives undertaken by the London Stock Exchange, we very much feel that it is important to focus at the culture and the ways and operating norms that financial institutions have. So we could not be talking about impact management a few years ago. This was a completely out of the blue conversation for some financial industry practitioners. The lens was always risk assessment and how the various sustainability transitions affect enterprise value. But at the moment, there needs to be a shift, and it's already happening, towards how the financial system enables the economic system and the economic activity, which at the moment has continued unchecked. I'm not the one to, especially in this audience today, to highlight the importance of climate change and especially the climate urgency that developing countries face. But both financial institutions and all of us as citizens, we realize that we are deviating from the global warming goal to keep the temperature below 2%, let alone 1.5%, which is the latest scenario by the International Energy Agency. On the biodiversity front, we are facing we're on the verge of the 6th mass extinction. And again, this is a risk that is realized increasingly by financial institutions. And of course, there is rising inequality, which poses its own threats to our societies and to financial institutions. So what is important, I think, to remember is that this is not just about climate. This is more about, it's not just about net zero commitments. It is about financial institutions changing the way they perceive their own business models and about taking impact into consideration. So this is why we are quite proud to present our methodology. It includes a number of sort of impact management indicators and issues that we are asking financial institutions to disclose against. We have 3 measurement areas: governance and strategy, which includes, very telling to Rajiv's point, gender equality, because gender equality is one of the indicators that also is a stamp for the culture of the financial institution and an increasingly male-dominated industry. And we also ask of financial institutions to take into consideration their impact on society and on the environment, including biodiversity and climate. So going beyond climate. Then we have specific indicators that look for a gradual withdrawal from the fossil fuel projects and any new projects undertaken, again, in line with the latest scientific scenarios for financed emissions and targets. And it's very useful to see HSBC working towards that. And then we're also asking financial institutions to follow the conversations on biodiversity and the metrics and set targets on that. Finally, we have a third measurement area, which is adhering to societal conventions and focuses on human rights due diligence across the financing activities and on a number of policies, including a global tax policy, anti-bribery commitments, as well as disclosure on whether the financial institutions finance or provides financing services to usually excluded groups such as small, medium enterprises, developing countries, or sort of women-owned businesses. So it is very important to sort of note that we will 100 Keystone institutions. This includes asset owners and banks, asset managers and insurers. We are conscious that these are very different institutions, but we feel that this one system approach, this holistic approach, is key to actually transforming the financial system. Just to reiterate and to maybe finish with that, to have time for questions. As we see from the various regulatory developments in Asia and in the UK and now in the European Union, but also across the Atlantic at the US, this is more about climate. It's about the financial system serving people and planet, not the other way around. Thank you.
Indeed, thank you. Thanks very much indeed. Thanks, Ellie. I will now like to go on to ask some questions. I actually had a list made in advance, but a lot of what you guys have said has been so interesting that I have totally discarded. So apologies, Seema, and would rather ask a couple of questions on what you have said. Linda, going on to you, the first thing that struck me, or several things that struck me, but one of the things you said was running a consultancy which kind of acted as a devil's advocate to the corporate boards. It's incredibly interesting, and I have to confess, for the first time that I heard about it. Could you expand on it? And secondly, why did you talk about it in the past tense? Does that not survive? How has that gone about?
Thank you. It's a good question. I mean, back then, it was quite a few years ago, the idea was actually to bring up different questions that weren't brought up because of certain creation of groupthink. Right. Groups usually like to compare different individuals live within cohorts, and they like virtue signaling, they like different types of values, and they want to adhere to them. And it's very hard for some people to raise difficult questions. It was also back then when we didn't have that much diversity on corporate boards. Maybe that's something that is changing now because of these ESG pressures and a variety of reasons. But I mean, the reason why I stepped away from it is that I thought, well, that's a very fun exercise, but I think you also need to ask the difficult questions, not just at corporate board level, but also at a variety of civil society and financial sector places where, sadly, we still mainly talk to the converted. And that really worries me. So that's also one of the reasons why we founded the center in Czech Republic. If you look at Central Europe, there's a lot of skepticism of the EU Green Deal, the taxonomy, so on and so forth. And that's actually shared with other regions as well because of the carbon border adjustment mechanism, ETS, so the emissions trading system. It's all seen as often a big threat and very costly. So I think what we also need to do better maybe is work with the skeptics and with the people who disagree, and actually put a little bit of effort into asking the wrong questions and getting the people who you don't usually meet on these circuits into the room. So that would be my main point about trying to ask the difficult questions. But it's great to see that everybody's working on these issues and pushing the envelope further. But I think we do need to really also start very actively engaging with the people who don't believe in it, don't like it, don't want to do it, and are not on the usual circuit of converted to the cause.
Yeah, no, indeed. I found having worked in corporates all my life, I certainly found it very, very interesting indeed. I have to tell you, the parent company is a 120-year-old company, and certainly in the past, there have been occasions where I have felt myself that it would be helpful if someone asked really awkward questions. The other thing I just wanted to follow up on Linda is, I think more than you mentioned something called impact-oriented accounting. And where does the world stand on this? I mean, do you mean, I think from what I could get from you was sort of present not merely in your accounting data, the financial numbers, but also the ESG impacts. So would you say sort of moving towards integrated reporting? We all, many of the companies used to have separate sustainability report and annual accounts in the past. Lots of us have moved on to integrated reporting. Is that the way forward that you see, and is that what you would recommend to the corporates and for that matter financial institutions as the way forward towards moving towards a greener future?
I think my fellow panelists made a very good point in the sense that we do need a bit more comparability, right? So that's why ISSB is a welcome change if you have the same rulebook and ideally the same, at least reporting, at least some sort of alignment that is definitely needed. Why I think that why I mentioned the impact weighted accounts is it's directly linked to that. You need to have comparable information. We hear that time and again from investor side, from different financial markets participants side, that we do need the same comparability that we have for financial accounting. We also need the same accountability, the same similarity in impact accounting. And that's why I think adding that as a crucial part of accounting would be very, very powerful. But for that reason, we also actually work with accountants and consultants, and it's not an easy thing to change. So I think we're just at the start of trying to figure out how do you actually also get the intermediaries actively participating and facilitating the process. Thanks
very much. Moving on to Jane, I have to say I found it quite stunning to note that only 43% of the companies listed in London on the stock exchange disclose ESG data. Did I get that right? And
no, no. It's 43% of the FTSE All World. Oh. So that's the All World 4,000 stocks and securities. So that's a different thing to being listed on the London Stock Exchange. Yeah.
And as part of the listing sort of, have you guys included that, or has the stock exchange including that as a precondition for listing for new companies on the exchange, or do you have a time frame for the existing listed companies to sort of converge towards a global standard of reporting?
So in the UK, we're moving towards that anyway, because the UK government have mandated the introduction of mandatory disclosure against TCFD, the Task Force for Climate-Related Financial Disclosures. That is going to apply to all premium listed companies, so right. All companies listed on the UK market, as well as other institutions, including pension funds, insurers, asset managers, etc. So actually, I think the UK government has taken quite a strong lead on this in terms of disclosure. So the stock exchange hasn't kind of mandated that. It's actually the UK government. But to support that, we have put out our own guidance as to helping UK London listed companies to translate that and right. Help around kind of like help them disclose against TCFD, because it's quite tricky. And there's components of TCFD that we simply don't really have mature methodologies around. For example, working out looking at scenarios and the impact of certain climate related scenarios on portfolios, for example. That is new emerging methodology. But I think actually what I would say is that I do feel as if I've been kind of doing on this topic for 25 years, right? One of the things that I've observed is a real switch actually in recent times to realizing that we simply don't have time to wait for things to be perfect, and actually more adoption of test and learn mentality. So, you know, if you look back, say 15 years, I think it would be near on impossible to have, it wouldn't have been kind of a thing to do to introduce TCFD framework without the real methodology to go with it. So actually, I think we're seeing some quite innovative policy interventions because frankly, you know, the policy asks are being mandated without the real kind of nuts and bolts of how to do it. But so that's definitely a shift in mentality. And I don't know if that's just a unique observation from my perspective or something that's shared on the panel. I'd be kind of curious to know, but it definitely feels like a change to me.
Right. I think virtually every one of you, each one of you mentioned the need for standardization. Indeed, we have the World Benchmarking Institute here as well, and I'll come to Ellie when I ask that question. I'll come to Ellie as well. It just struck me, you know, there are the major stock exchanges in the world. Could you all not potentially align your disclosure requirements, your standards, your transparency requirements, you know, London, New York, Hong Kong, Singapore, Mumbai, Sydney, Tokyo, whatever?
Yeah, and that's what the UN Sustainable Stock Exchange is driving towards, the initiative. So really what's that? No, so it started with the creation of model guidance for TCFD reporting, but then challenged the individual exchanges to then issue their own kind of country specific, because obviously you can't create one which is always going to be applicable for all countries. So we've done that. Joburg have done it quite recently, and others are following suit. So yes is the answer. I think, you know, we have issued guidance around climate. We've talked a lot on this panel about the fact that it's not, climate is absolutely kind of, you know, the big issue of our time, but not at the expense of people on the planet. Yeah. So I think that we will see more model guidance around disclosure reporting from the UN Sustainable Stock Exchange Initiative on issues beyond climate.
Yeah, no, I think that's that will be very useful also, speaking as a corporate to the other side of the fence, because oftentimes you know, we don't know what do you sign up to and what will be the gold standard every institution you deal with, depending on also sometimes which part of the world they come from, tend to value some more than the other. So that'll be helpful, I think, in this journey. Zoe, coming to you, a very interesting presentation indeed. As a renewable company which deals with Hsbc, I could spend the next 5 hours, but that'll be midnight my time. So I'll just a couple of I guess observations, questions. I wonder what you think. Indeed, it's also open to other panelists of you know, the linkage between the global carbon market and indeed, in fact, you know, speaking as someone from a so-called developing countries, you know, it's obvious that, for instance, a nation like India still needs to depend for a period of time on fossil fuel. We also know, and you work, Zoe, you mentioned about working closely with Energy Transitions Commission, I think, and you know, we ourselves have worked. I worked closely with Laura Adair Turner, and the other folks working on that in Terry in India. You know, and it's an obvious point. Building wind farms and solar panels, solar farms do not reduce emissions. Closing coal-fired power plants does. And you know, you talked about innovative financing. How about do you think it is possible? You know, for instance, my company has a power plant where the power purchase agreement runs out in 2037. Could we, through a linkage, or could the financing markets come up with, through the linkage with the global carbon markets, whereby you say, all right, you can close in 2035 or 2030, or you can choose any year for any asset in any market, and you know, through the global, because that is really, you know, when we talk about the emissions reduction, that is actual reduction. The rest is, you know, all right. Otherwise, I would have built a coal-fired power plant. Now I'm building a solar panel, and therefore, comparatively, I'm saving. That is different than actual reduction. Now, in the absence of CCS, that is the closest that I can see to an actual reduction. It also, of course, raises issues of livelihood, which one mustn't ignore. What happens to the people and during the COP, many of us who happened to be there had Nick Stern. We had a very interesting exchange with him on what exactly does that mean. But coming back to you, is that areas, are those, when you talk about innovative financing solutions, are that areas which folks in HSBC and other large global all-powerful financial institutions working on and thinking about?
We absolutely are indeed, because one of the biggest issues, I think, going back to Linda's point of having crunchy conversations, is this piece about transition and what does transition look like in a way, it look like in terms of integrity of shift. So going back to the financing accelerated exit of the coal companies, you know, one of the questions is making sure that if you're getting investors in to provide the capital that enables an accelerated shift from coal to renewables, how that is not perceived as simply burning more fossil fuels up front and somehow a few years down the line the asset won't be closed, and you know we've done is brought forward climate change instead of push it back. So these conversations do take a lot of stakeholder engagement, because to accurately facilitate the global kind of shutdown of coal, you kind of want to know what the life cycle is of the plants that are in existence right now versus the carbon intensity of them, to make choices about which ones to support the closure of first. And so for a global entity like ourselves or many other banks, you know, one of the questions is, okay, what do you prioritize where in a way that makes sense? So yeah, 100% the conversation is going on. I think it's a relatively slow one. I mean, going back to Jane's point about the shift in urgency, you know, we've got this urgency, and I've noticed it as well, but we've also got, with the urgency comes faster kind of convening of knowledge and cycles of knowledge, and more people wanting to do more at once. And sometimes that doesn't result in the optimal outcome. You need to do it, but you need to, but you have to be conscious that, you know, you have to iterate along the way. And for the likes of many global organizations, you don't want to make a mistake. We don't want to make a mistake on what we're doing that is harmful to the climate. But equally, we want to play our role in getting there fast for the financing. And this is being candid, it's a real conundrum, I think, for many people. And we'll work through it. But it's tricky.
How does
can I just jump in? I think Zoe is absolutely spot on about the disconnect. When we did the big consultation with 160 stakeholders globally, what we realized is that a lot of big financial institutions and companies are scared of moving and doing something because they're scared that they're going to be attacked. And I think that that's a very important thing. I still think that the moving is needed, but also with a bit more disclosure and also a reiteration process. So learning from the mistakes and improving the process as we go on, because nothing is going to be perfect from the get-go.
Yeah, absolutely. Sorry, go ahead, please.
I was just going to kind of reiterate, I think one of our positions is that we feel it's really, really important not just to exit fossil fuels. You know, there is a growing kind of call for financial institutions to do that. And actually, I think the withdrawal of capital from fossil fuel companies is a very dangerous thing, actually, because actually it would have, I believe, lots of unintended consequences. So LSEG is firmly of the belief that actually the transition needs to be fully funded. And in order to do that, we need things like transition bonds, we need transition capital, etc., with very clear, demonstrable transition plans, which would then unlock that capital along the way. But simply to withdraw is unsustainable as well. And I think that this is particularly the point when you look at countries who are remain pretty dependent on fossil fuels, because actually the impact of withdrawing capital from those markets is not just an environmental kind of consequence, it's actually a huge social / humanitarian consequence. So I think we have a responsibility as the financial sector, not just to walk away, but to transition the change.
Absolutely, indeed. And, sustainability means sustainable solutions first and foremost. And in my experience, a few years back at Chatham House, I asked someone, in order to dramatize the impact, that all right, let India close all the coal tomorrow, and doing a back of the envelope calculation, I could quickly reach 40 million people who were dependent on the entire chain. And he said, so what do we tell them? What is the public policy response? So I do agree. I do agree that just pretending that the problem doesn't exist, or indeed, just selling it off, pass it on to someone else so that my balance sheet and conscience is clear, I don't believe those are solutions. Those are for old power companies which are now transforming into only renewable ones. This is a challenge we face all the time, because it's not only a question of losing the money and the stranded asset. By the way, that itself will be a big issue. If you suddenly walked away and created a whole lot of stranded assets, ultimately you are asking the public, the taxpayer, to fund the bill for cleaning up our own consciences. So the whole lot of moral hazards on this issue that you need to think about. Which also makes me, Zoe, ask one other question to you on this whole concept of a just transition. In fact, again, this is a point open to all of you. How does the bank or how do all of you look at who defines what is just? I mean, I have heard. By the way, I personally believe as a citizen and a resident that India needs to move away from coal, not because in order to look good, but simply because the deadly air in North India is not going to come in 2070 or 2060, but it is there today. So for its own good, India needs to move, and if the developed countries doesn't want to pay, well, so be it. A few things, everyone has to be responsible themselves. So that is my view. However, I've also heard passionate other side. I shall not name who. Including in Glasgow, by saying, well, these people have double standards. Firstly, I'm just repeating and deliberately being provocative. Firstly, they created the problem, and now they very, very smartly say, close down the coal, but leave our gas-fired power plants operating, because that's a transition fuel. Because we have gas, by the way, in Europe, and you lot in Asia don't. So you get into this sort of quasi-nationalistic, injured colonial, ex-colonial pride and all kinds of issues. Which becomes very, very difficult to see through. And I was particularly asking this question to Zoe because you are both Asian and you're Western. And how does your bank look at this whole issue of transition financing? What is just transition? What is worth supporting and what is not?
Yeah, I mean, it is one that we are constantly working through and talking about, because even 3 years ago, before we had a net zero ambition, but we had sustainable finance related and climate related reduction or emissions related reduction targets, the just conversation was in circulation then. But I was in fact astounded to get some different perspectives around not taking people into account, but only taking climate into account from external stakeholders, not from within Hsbc, and really not accepting a conversation about supporting people with some fossil activities that are existing already. So I think what we've tried to work through is to understand how people are being brought into a transition framework, whether that's at a government level or by corporate actions and corporate targets to provide employees with new skills to be able to shift perhaps in role and those kinds of activities. Actually, one of our philanthropic programs is all around future skills, but that's a different topic.
Right.
But I think it's about again, sort of transparency and disclosure about what the plan is. So if you are operating, if you're a power facility today and your government, for instance, doesn't have a 2050 target, it has a later year one, you know, not using that as an excuse not to talk about what you're going to do. And so for HSBC, it's very much around understanding the perspective of the corporate or the sovereign that we're supporting, and looking at the transition plan, and over time thinking, is this transition plan scientifically aligned? And scientifically aligned means with the emissions cuts, but also from that people and an SDG perspective as well. And that will be an ongoing dialogue, and being relatively frank about this, there's a lot of work to do to get the knowledge and capabilities and capacity up across all of our financial institutions to be able to actually have that conversation, which loops back to why the harmonization and consistency and disclosure that the stock exchange are pushing, that the governments and other regulators are pushing, makes sense, so that every single bank is asking their clients the same thing. To understand whether or not the transition plan is credible, because this credible and integrity point of scientific alignment is a crucial one that we'll need to get to grips with.
Yes, please. Yes.
I was just going to say that when we talk about just transition, I think it's easy and quite common to think about the trade-offs between developed and emerging economies. But actually, I think that it's as relevant to think about it in country. So within the UK, for example, we see public policy being introduced, which is quite punitive to the lower income groups, but actually are trying to achieve a sustainability linked goal. And actually kind of national governments and policymakers, I think, have quite a hard job on their hands actually to meet, you know, some quite demanding targets, yet kind of avoid disenfranchising huge swathes of the population who are going to be disadvantaged. You know, for example, we have in the UK some kind of legislation being enacted regarding cars, and very soon, basically, people will be, well, now actually are having to pay to drive older cars in urban centres. And of course, the cost of switching up the vehicles to something more sustainable is simply prohibitive for many people, right? So, you know, that's just one example, just to show that it's not only about kind of a just transition, it's not kind of only between countries, it's within country as well.
Absolutely fair point, and thanks very much indeed, Jane, for pointing it out. I noticed on the clock that we have 6 minutes to go, and Seema, our boss here from CII, is very strict with timekeeping. So before we run out, Ellie, I was just wondering, thanks very much for introducing the work that you do at WBA. I thought I would flip the question for you and say that, all right, let's, you know, we think we are a good company, but then point out one which doesn't, so that may not be saying much. But, you know, what is one to do? You know, we had the TCFD, we have signed up to the science-based targets. Now we have the GFANs, we are getting a sustainability rating done by S&P or credit rating agency. And there are so many benchmarking standards themselves. I mean, do we need a benchmark of the various benchmarks? How does one get one gold standard, so to speak? Or you could be a silver medalist in that standard scale, but so that, you know, you have your own 7, you know, areas and the main companies, and Zoe talked about how people in HSBC are going about it, and all of us, I guess, all of us want the same thing, I suspect, but all of us kind of struggle. And since I'm the only horrible corporate on the panel, well, Zoe is as well, but you know, we on the other side we face what does one do? What is the actual? It's a bit like you know, in the old days when we had the coal-fired power plants, we'll sign up to various safety standards, and try and obtain a platinum or a gold or whatever it was. And then after you did it a few years, then you said, oh no, someone would say, oh no, South Africa has a more elevated system. So let's sign up to that. Okay, so now let's get 5-star on that. And sort of, it's a never-ending journey, which is life, I admit, but you kind of never have a sense of, okay, you are there. How does one look about it? How do we all think about it so that the various standards and the benchmarks are standardized from a more corporate perspective, or for that matter, financial institution perspective, which I suspect was the main focus of your remarks?
Yes, thank you for that question. We get that a lot. So as part of our effort to drive the disclosure movement and to increase sort of transparency in the financial sector, but also in the private sector more generally, we spend a lot of time trying to align with existing initiatives. So we are not creating another benchmark. We are aligned with what is out there and with the best available science. In that respect, we are not sort of just creating another questionnaire because we're very conscious of the reporting burden for financial institutions and the private sector in general. Another sort of activity we undertake is that we take a lot of time to engage and educate financial institutions and the private sector. So this goes back to what was mentioned earlier, that I think this is a journey and no one has the right answers. But we need to sort of keep the dialogue and we need to keep talking to each other. So the way the benchmarks work is that there are also roadmaps for the financial institutions themselves. So they can, in the way I see, for example, the methodology is that I think it's going to be very hard to find financial institutions that would perform very well across all the indicators. But we think that this methodology and generally the benchmarks at WBA can serve as a starting point to have these conversations and to educate ourselves. We bring the voice of the stakeholders because of the time that we spend engaging with stakeholders. We bring these perspectives and we're sort of holding a mirror to the private sector saying, this is how you fare. And unfortunately, a lot of the time, this is a shock to them to see how far away they are. But in terms, also just a final point, I'm conscious of time, on the just transition, we also have a methodology on the just transition where we sort of evaluated 180 companies from the utility sector. And there we defined it very precise in terms of the human rights impact that leaving fossil fuel entails, how companies can reskill workers. So there are very concrete steps, and these are included in our methodologies. That's part of our journey. We also like to bring community of practices together to share the learning between companies themselves.
Well, thank you very much. As it happens, we have less than a minute to go. I think it was perhaps, I wonder what would have happened if we hadn't had the people drop from the panel, because I honestly have enjoyed every single moment of it and still have a lot more questions. But it's been an absolute privilege to hear all of you. And it's been an absolute privilege to moderate an all-woman panel as well. So thank you very much. I'm sure my daughter arrives from the UK tonight, where she's a student, and I'm sure she'll be quite proud when I tell her that. So thank you for giving me this opportunity, and best wishes for the upcoming holiday season and New Year. Thank you.
Thank you very much.
Thank you. Thank you very much. Bye.
Seema?